Hello, good morning. Welcome to our stock market update for Tuesday, March 28th of 2017. I'm really excited. Today's a massive day. It's going to bring around a lot of opportunity for me because my barber's back and I desperately need a haircut. He was on vacation and I emailed him and I said, Tony, you're either coming home soon or I'm buying a weed whacker and invoicing you for any liability that I caused to myself. So that's exciting. Other than that, though, in relation to the market, we've got some tradable opportunities as well. We're going to see a lot of news items out of the Federal Reserve. We got a whole bunch of speakers, so I'll talk about that. We're going to talk about some new updates to the Brexit plan, talk about what Donald Trump is about to sign today, a new piece of legislation, and what else can we talk about? The spending shutdown. There's a very little known topic out there in the market, and the amount of media attention it's getting is zero, and it's very concerning because it's going to hit you over the head one day. You say, why wasn't I aware of this? Our trade pros have known about this for weeks now, and it's coming closer and closer to deadline, and we're getting closer and closer to trouble. And I'll tell you how that can move the market and why as well, and how I can put some risk into it. All right, let's talk about first and foremost market update. In today's markets, in Asia, Japan's up over 1.1%. So really strong session overnight out of Asia. Hong Kong 0.6%, China minus 0.4%, and India up 0.6%. All right, so overall Asian market strong. In Europe, London is flat. Paris is up 0.1%, so flat as well relatively. And Frankfurt up 0.5% out of Germany. So in European, Paris and all other markets flat. Germany is a strong one going into this morning's session. So watch the DAX, DAX. If you're on CQG, it's DD. That's the symbol for it. All right, 10-year Treasury at 2.37%. Futures in the U.S., Dow is pretty much flat. S&P is now slipping into negative territory. NASDAQ is as well. Crude oil up 1%, almost trading 48.14 and now 48.29. So the upside continues. On the open of the pit session, we got a bit of a rally. I'm just peeking over my shoulder to have a look, give you guys an up-to-the-minute update. All right, so that's what's going on with crude. That's the situation there. Today's economic calendar, we got consumer confidence at the top of the hour, 10 a.m. That's going to be a pretty big number. Richmond Fed Manufacturing Index, that'll also cause some commotion if there's a big hit or a big miss of that number. But the main one here is consumer confidence. All right, we got 12:45 Fed's George speaks and 12:50 Janet Yellen speaks. And we got a 5-year note auction at 1 p.m. So we got a pretty busy day. I think the Fed speak is something to definitely look forward to. That can have some impact in the markets. Primarily, how will they raise interest rates? Will they continue to raise 2 more times or maybe 3 if they're more hawkish? The Fed was hawkish leading up to the announcement, but then did a really dovish rate hike. Are they dovish now? Or are they going to continue their hawkish tone? That's what market's trying to pick up on the sentiment around. Also, whether or not they're going to unwind the balance sheet and how, kind of a sneak peek at that. And that's pretty much, that's it. That's what they're trying to look for. And the economic outlook, has it changed? Has it strong jobs and inflation statistics? Are they getting nearer to their targets, et cetera? That's what you got to start to look at as a trader. It's not a binary 1 or 0 event where it's a rate hike or not. There's a lot of it that goes on behind the scenes that leads up to that decision. So you got to start understanding the stuff. All right, Fed watchers, like we said, today's a big day. Janet Yellen at 12:50 on the Workforce Development Conference. Her colleagues at the central bank also speak. So we got Esther George today, Kaplan, and Jerome Powell. They're also all due to speak throughout the day. So check your wires, check the time slots. Trade pros in the subscriber room will let you know, will notify you when the speeches are starting and what they're saying, as I always do. On to the next piece of items. So Obama was a really big proponent for clean energy. Well, Donald Trump is about to sign that away. Signing an executive order today that's going to start the process of unwinding directives to combat climate change. Basically, he's undoing the energy independence order that Obama signed into action during his presidency. All right, what will it do? It'll permit more carbon emissions for power plants. It'll basically rescind or lift the ban on coal leasing on federal lands and reverse rules to curb methane emissions from oil and gas production. Basically, it's going to allow companies to be a little bit more dirty in the way that they do their business. Not dirty as in like shady business, but more dirty, more emissions, less really focus on the environment, more focus on profitability and the bottom line. It's been like that for the entire industrial age. And my gosh, is it causing a lot of pollution. There's a really cool Netflix documentary I watched on the weekend, has nothing to do with this market update. It's called Sustainable, and how actually when you look at farming, one of the big arguments out there is that when you look at farming, And if they say organic won't feed the whole planet, well, of course it won't, because it's looked at differently. But if you actually factor in the cost of commercial farming and the damage it's doing, and you depreciate the soil, because what they do is they go in, find a fresh patch of soil, shoot it up with chemicals, kill the carbon in the soil, plants can't grow, move on to the next patch. There's not that many patches you can move on to. This planet has finite resources. So the idea there is sustainable farming. If you factor in the cost of land damage, it's actually much more expensive than going organic. The good news is that soil could be reversed with the right amount of things. Anyways, little detour, but I wanted to point that out, all right? We got to take care of our environment and be conscious we're living on it. Tomorrow, UK Prime Minister Theresa May will trigger officially the Brexit process. So they're going to finally start to separate from the European Union. It starts a 2-year severe and intense negotiation process. All right. The European Commission President Jean-Claude Juncker says 50 million or 50 billion pounds is going to be paid out to the European Union for that exit on the Brexit front. Britain says no way is that going to happen. So that negotiation's off to a rough start. All right, the Dow yesterday extended its losing streak to 8 sessions consecutively. That's the longest stretch since 2011. So as you can see, a lot of this buying that we were talking about that's been coming in late to the game is now getting cycled out of that trade. All right, the trade was lopsided. Let's be honest. We all knew it was going to go down. It was just a matter of when. Continue to watch for some lows. I think we could really step on this thing below some of the support structure down below. I think we got a lot of sell stops planted, and if we go in and start touching them, this thing could really start to drop. I wouldn't say it's going to go into correction territory, which is 10%, but I think we're due for a healthy dip. I mean, what was it, 130 days, for goodness sake, that we hadn't had a down 1% day? That's ridiculous. That's getting to the point that people who are just starting to trade don't even remember that a down market is possible, right? Just buy and close your eyes. What are your 3 initials, GAP or mine? All right, let me buy the stock and it'll go up. That's ridiculous. It can't work like that for a long haul. So retail, once again, is getting squeezed out. I guarantee you that's who was long at the top. Guarantee you. All right, here's the last item of today's morning market update. I'm going to have to look at the notes on this so I can give you precise dates. Okay, there's basically what happened is Obama signed a piece of legislation that suspended the spending limit. So the government has a monthly limit on what they're allowed to spend in order to pay all their liabilities and to continue to operate as a government. We know that the government is not an efficient entity by any stretch of the imagination. But what happens is they have a cap on a monthly basis. They can't spend more than this amount. Well, what Obama did was they lifted that amount. So they had basically a black card, an Amex black card with no limit, and go spend like drunken sailors. What is that going to do? Obviously, throughout that time period, the deficit has ballooned because they keep spending. Now, that has already come to pass as of March 15th. And they are no longer having that unlimited debt ceiling. So now they have a cap. So imagine telling your spouse or girlfriend or boyfriend or whoever you have out there, hey, you can't keep spending like this. I'm going to cap you at $500. So suddenly now it's like, all right, I could still spend. I got to be a little bit more budget conscious, and I can't spend at this rate. They're going to be disappointed. That's what's happening with the government. They have now a debt ceiling that they cannot exceed on a monthly basis. Let me give you some crazy stats here. Well, it's not crazy. It's just interesting. They have to negotiate. So basically, the Republicans and Democrats have to come together and negotiate a deal, whether or not they're going to suspend this debt limit again or what that new debt limit will be. I don't know if you guys have been listening to the news lately, but that healthcare bill is a disaster from within the own party. From within the Republican Party, they couldn't pass a bill. Now, be it whatever reason, the point is they couldn't pass that legislation for healthcare reform. The question is, now how do they work with Democrats? Democrats found new life in that. They said, look, they gave us opposition. They lost from within their own party. They're feeling the strength. They're feeling that they can win, and they're going to probably go head-to-head against this. And I hope to God that they don't argue for argument's sake, but unfortunately, that's what politicians do. So watch out. This could potentially be dangerous. The government has been shut down before. What would happen is if they don't have a new agreement by the 28th of April, that's their deadline to pass a spending bill, they're going to shut down the government. They're going to start to close some branches and offices of the government that are deemed to be non-essential. So they'll basically pare it down. A lot of workers will be sent home to work for the government, and they'll lean it out. My question is, if it could run on less resources, why doesn't it? Right? They should just shut that down for good, some of it, and then cut the fat out. We're in massive debt. in Canada and in the US. There's massive debt. And unfortunately, you're going to have to cut something for the debt to stop increasing. That's a no-brainer. I understand that a lot of people are outraged for the healthcare bill. Like, well, how many people are going to lose coverage? I get that. That's a terrible thing. But at the same time, the flip side of that is we got to look at ways to become more fiscally responsible. You can't just keep spending money you don't have and expect that to continue forever. All right? Sooner or later, the debt payments will cripple you. And that's kind of where the government's at. So watch for that. That's very, very important. I'm baffled nobody out there in the media is talking about it. I've been talking about this for weeks. It's coming down to the wire. End of April. April 28th is the deadline. At that point, there's a government shutdown. There has been a government shutdown before, so it's not an epic worry that you need to freak out about. It has happened for up to 30 days in the past. Markets have responded on a downside. So it's not going to be the cause for the market to drop, even if they shut down, but man, is that a worry. Just think about it. Failed healthcare bill from the Republican side. All right. Now that they can't save that money on the budget, how are they going to do the Trump tax plan? Okay, how's that going to pan out? What about the infrastructure spending? Spending, but you got to have savings somehow to spend, right? So those savings went out the window. So now it's a whole new program. How are you going to do your military spending without the savings from the healthcare plan? So now things are starting to weigh in a little bit. The market's saying Trump had good ideas, all right? But you can't run the government like you run a private company. It ain't the same. You got to understand there's a whole bunch of people in the government that just politic and try to block your agenda just because they support someone else's. Not because it's a bad idea, because they support someone else's or their own. That's the nature of politics. I think it's a huge waste of money, massive waste of money to have this many politicians and this much stuff to write legislation that takes years to pass. It's terrible anyways. All right. It just very bureaucratic process, but this is coming from a guy who runs a small business and has been in business for his whole life, basically. So that's my opinion. Don't click dislike because of it. Click like because you agree or learn something maybe. All right, so I'm going to wrap that up. Watch out for that event. I think there's a lot of things starting to kind of weigh in on the shoulders of the market, and they might continue to slide lower. Right now, I'd be selling rallies and watching for key levels to break. All right, guys, that's it. YouTube, before we go, I want to remind you of something. This Friday at midnight, our pricing is going from $79 a month to $139 a month. Now, with that price increase comes two services. We currently have one bundle. We're going to now have two bundles. One is going to be options trades emailed to you throughout the day, every day at noon. So it's going to be unusual option activity, and an options report on Sunday with trade ideas. That's one bundle. The second bundle is going to be futures trading and day trading's focus, including the trading room. That's a second bundle. Options is $79, futures is $99, combined $139. Today, if you sign up before Friday, go to tradeproacademy.com. You'll see all the info on the website until the end of the week. If you sign up before Friday at midnight, you get those two bundles in one for $79. Double the value at half the price. All right, check it out. And there is value. There's a 30-day money-back guarantee as well if you don't like it. If you don't like it, I don't like taking your money. I'll give it back to you. I'll refund you. Come out and have a look. TradeProAcademy.com pricing. We spend a lot of time in the group together, trading as a team, and I'd love it if you joined and checked it out. All right, YouTube, take care. All the best. If you have questions, please leave them in the box. Please like and share this broadcast. Love to grow our exposure a little bit more. If you think a friend will benefit, share it with them, like it, post a comment, and subscribe to the channel. We got these coming mostly on a daily basis. Take care. Have a phenomenal day. Trade careful out there. And today I'm going to tell you this. Today, the name of the game is take small profits regularly. Forget the 30-point chase. All right? I almost said something really bad. F the 30, basically. You know what the F stands for. Look for 2 and 3. On the way to 30 points, you can get 2 or 3 points how many times? 10, right? 10 times. So look for small movements with high probability. And if you want to make more money, increase the size of your contracts, not the size of your targets. Increasing target size decreases trade probability. Trade Pro Fact. Take care. Have a great day. Subscribers, give me 2 minutes. Let me wind down this broadcast. I'll share the screen. We'll look at some levels, and we'll trade the open together. Tony, thank goodness you're coming back because YouTube gets to see you with a great haircut tomorrow. See you later, guys. All the best. And maybe I'll catch you in the trading room. Ciao.